Now that we've learned all about deductions, we're going to talk about the tax forms that you're going to get when you have a job, whether it's when you start out with a job or if it's when you go to file your income taxes. So there are 5 main forms that we're going to take a look at. The first form that we have is an I-9. And so in I-9, you get this form when you start a job. So they give you this form to make sure that you are eligible to work in the U.S. So you're going to want to prove that you are a U.S. citizen or you have a work visa or whatever the case may be. So something that you need to know about when you are filling out an I-9 is that you must present forms of ID. Usually it's 2. So it might be something like a driver's license, your social security card. It might be your passport or a state identification card, something like that, that they can prove that you are a resident of the United States. The next form that we are going to talk about that you are going to fill out is a W-4. So this is another form that you fill out when you start a job. And so this one is to determine how much you will have taken out for taxes. So in the last chapter, we talked about the deductions that we take. This form kind of helps guide you to see how many of those deductions that you'll end up having, so that way they can take out the correct amount. Okay. So these 2 forms are filled out when you start working. The other forms are going to be forms that you're going to end up getting every single year after that. You do not need to fill out a new I-9 and W-4 every year that you work for the same job. However, if you have multiple jobs or you start a new job, then you would have to refill out those forms. So the first form is a W-2. And so the W-2 is received in January. They have to be mailed out by the 31st. And so this form tells you how much you earned and how much you paid in taxes. So it's kind of a summary. So it'll tell you how much was taken out for Social Security. It will tell you how much your gross and net income was, how much you paid in state tax and federal tax, anything like that. Okay, something important that you must need to know about this is that you must get one for every place you worked. So, for example, you had a job from January to May, and then you started a new job in June, and you worked there until the end of the year. So if that was the case, you would still get a W-2 from the place that you worked for those first months of the year, and you would get a separate one for this place that you worked in those last months of the year. Because you would have had taxes taken out and you would have received income from both places. So maybe you have a weekend job and you have a full-time job. Your parents are nurses, and then but on the weekends they pick up extra hours doing something else. Okay, they'll get their W-2 from the hospital. They will also receive one from their side job. So maybe they work at Target during the holidays to get some extra money or something like that. Then they'll get a W-2 from Target as well. Some people, instead of a W-2, they are going to get what we call a 1099. So this is also received in January. So you receive this if you are paid by a company, but you're not necessarily an employee. So you're not working like a doctor or a teacher or a lawyer or something like that. So maybe you're an independent kind of contractor. You know, you do a bunch of different landscaping or something like that, where it would show you how much that you made. So it would show you your income. But often with people that are paid by 1099, taxes were not withheld. So another good example of people that would get a 1099 is when you see people who sell things with those online companies. So, you know, they sell a bunch of different cosmetics or Pampered Chef or something like that. They do a lot of selling online. They will often get paid by the company, but they often don't take taxes out of those. So at the end of the year, they're going to get a statement that's going to tell them how much money they made for the year. Something to keep in mind though, if you are a 1099 worker, since they didn't take out taxes, if it was something that you did as maybe a side gig and you only made a few $100s, you're probably not going to have a whole lot of taxes that you're going to have to pay. You will have to pay for those taxes. But if it's something that this is your profession and you did not have taxes taken out for the whole year, you might owe a really large amount when you go to file your taxes. And so then when we do go to file our taxes, a lot of people use a 1040. So there's a lot of different tax forms that people use depending on their situation. Also depending on their age, there's a 1040 EZ for people who, might be younger and whatnot in other different situations. But this is the main tax form. And so this is what is completed in April or whenever you get your taxes done. It just needs to be completed by April in order to avoid a tax penalty for not filing your taxes by the tax deadline. So the purpose of this form is to file your taxes. And something that you need to know just about this is that this is one of many different types of forms.